Let me ask you something. If your country's economy collapsed tomorrow, how much of your wealth would survive? For most people, the honest answer is almost none. And that's not because they don't work hard. It's not because they don't save. It's because everything they own is trapped inside one border. Today, I'm going to show you how to change that. And you don't need to be wealthy to start. Welcome to the Borderless Investor, where we help everyday people build wealth beyond their home country, using global ETFs, fractional real estate, and strategies that actually work in the real world. If this is your first time here, stick around. This video might be the most important financial shift you make this year. Here's a story you might recognize. Someone works hard for years. They save money. They maybe even invest a little, locally. And yet they feel like they're not getting ahead. Their savings lose value every year. Their local market is volatile. Opportunities feel limited. Sound familiar? This isn't a personal failure. This is a structural problem. Because the system most people use, saving locally, investing locally, thinking locally, was designed for a world that no longer exists. The problem. The brutal truth is this: if all your money is in one country, you're carrying three invisible risks every single day. Risk 1. Currency erosion. Your local currency quietly loses purchasing power over time. What $10,000 buys today, it won't buy in 10 years. Risk 2. Limited opportunity. Every country has maybe a few hundred investable companies. The global market has tens of thousands. Risk 3. Concentrated exposure. One election. One economic crisis, one policy change, and everything you've built takes a hit all at once. This is why intelligent people working hard their entire lives still struggle to build real, lasting wealth. They're playing a local game in a global economy. But here's what's changed in the last decade, and most people have no idea. The barriers that used to keep global investing exclusive to the wealthy, they're gone. You no longer need a private banker. You no longer need to live in New York or London. You no longer need $10,000 to start. Today, anyone from almost any country can invest in global markets with as little as $10. Let me show you exactly how. Step 1. Global ETFs. The single most powerful tool for global investing is something called an ETF, an exchange-traded fund. Here's the simplest way to think about it. Instead of buying one company, you're buying a basket of companies. Hundreds, sometimes thousands, all in one single investment. And when that ETF is globally diversified, you're suddenly exposed to the biggest US companies, European markets, Asian economies, emerging markets with explosive growth potential. One investment, instant global diversification. For example, a single global ETF like VWRA or VT gives you exposure to over 9,000 companies across 50-plus countries. Think about that. One purchase, 9,000 companies. The entire world, that's the power of global ETFs. Step 2, fractional investing. Now here's the question I know you're thinking. This sounds great, but don't I need a lot of money? No. And this is where it gets really interesting. Fractional investing has completely changed the game. You no longer need to buy a full share of anything. You can buy a slice, a fraction, of any asset in the world. One share of Amazon costs over $150. But with fractional investing, you can own a piece of Amazon for $5. This means the minimum barrier to global investing isn't thousands of dollars anymore. It's whatever you can spare this month. $10. $25, $50. The amount matters less than the habit. Step 3, access from anywhere. The third piece of the puzzle is access. And this used to be the biggest problem, especially if you live outside the US or Europe. But today there are platforms specifically built for international investors. We will discuss these platforms in the next videos. Platforms that let you invest in US and global stocks to access international ETFs, build a portfolio from Kuwait, Nigeria, Indonesia, Brazil, almost anywhere. The point is simple. Where you live, is no longer your financial ceiling. Step 4. Think in currencies. Here's something most finance channels never talk about. When you invest globally, you're not just diversifying across companies and markets. You're diversifying across currencies. And this is one of the most powerful forms of financial protection available to everyday people. If your local currency drops 20%, but your investments are in US dollars, euros, or a global basket of currencies, your wealth doesn't drop with it. In fact, in some cases, your wealth actually increases in local terms. This is currency diversification, and it's something the wealthy have always used. Now you can too. The simple example. Let me paint a simple picture. Imagine you invest just $100 every month into a globally diversified ETF. That $100 is now working across the board. 50 plus countries, 9,000 plus companies, multiple currencies and economies. You're not betting on one government to get it right. You're not hoping one economy stays stable. You're betting on human progress globally, and historically, that's been the safest bet of all. You don't need to be rich to invest globally. You don't need to live in the right country. You just need to make one decision, to stop thinking locally and start thinking borderless. Because the investors quietly building real wealth right now, they're not waiting for their local economy to improve. They're already invested in the world. If this gave you a new way of thinking about your money, subscribe. Every week on this channel, we break down exactly how to build a global portfolio, step by step in plain language. And next week, I'll show you how to build a simple global ETF portfolio from scratch. The exact ETFs, the exact allocation, and how to set it up in under 30 minutes. That video drops next week. Don't miss it.